Good morning to all. Today we are going to discuss about the primary market and its types of functions of primary market. Sorry. So the primary market. So meaning of primary market. The primary market is also known as a new issue market. So the primary market it is also known as a new issue market. So it is also in first issuing to the in securities. So which refers to the market where securities. So it is also in refer to the market where the securities such as stocks in primary bonds and debentures and created and issued for their in first time by the companies or government in order to raise capital. So the primary market it can be in securities are marketed. So it is also involved to the in bonds, debentures, and securities also. So in finance, we refer to the in market where new securities are bought and sold for the first time as a primary market. So primary market in it is also new securities bought and sold in first time. It is also known as a in primary market. So in this primary market, companies or governments sell their securities directly to investors. So it can be indirect selling to the investors in securities who purchase them for the in first time. So it is also in purchasing in first attempt. The primary market plays an important role in the economy. It provides companies and governments with a way to raise the funds. So it is also very important to the in economy and it is also in rising to the in funds also. And investors wish uh, opportunity to invest in a new securities. So the investors, it is also new opportunity and to invest the new securities. So it is also known as a in primary market. So next, functions of primary market. So the functions of primary market, it can be listed below. In first one, raising capital. So price recovery and facilitating the transfer of risk, providing investment opportunities and regulations of in primary market. So these functions are involved to the in primary market. So in first one, rising capital. The primary market is a vital source of capital for the in companies looking to expand their operations. So the primary market, it is also a new issue market. So it can be invested in new securities and bought and sold also. So it is also in source of a in capital to the in companies to invest the new projects or pay off existing debt. So it is also in a investors new projects also and it can be pay for the in existing debt by issuing a new securities in the new issue market. Companies can raise the funds they need to grow their business. So the investors, it can be new securities also issuing, and companies can raise the funds, and it can be need to grow up the business. So it is also in rising capital. So next one, so price discovery. The price discovery of a new issue market helps to establish the fair market value of newly issued securities by setting the initial price through the or other mechanisms. So new issue market it can be helps the in fair market value of issued in securities. So it is also in fair value means it is also in a correct quotation of the securities value. So it can be in setting to the in a initial public offering also. So it can be in first the securities introduced in public. or other mechanisms. This process helps to ensure that investors are paying the fair price of the securities they are buying also. So it is also in a fair value of the securities and also in buying to the securities. So next one is the facilitating the transfer of risk. So the risk of the in primary market, it can be transferred from the companies to the investors. So it can be risk transfer to the companies or investors who purchase the newly issued securities. So in this in companies or investors who purchase to the new issue securities. This allows companies to reduce their in financial risk and transfer to the investors who are willing to take on that risk in exchange for the in potential for the higher returns. So the financial risk it can be transferred to the investors. So the investors who willing to the uh, take the insecurities and exchange for them in a returns also. So another one is providing investment opportunities. So investment opportunities of the in new issue market offer a range of investment opportunities to investors. So it can be offered to the some securities. It is also a range to the in opportunities of the investors, including equity shares, bonds, and other debt instruments. So in this offer a range of insecurities included in the equity shares, bonds, and other debt instruments also. The securities can be purchased by the individuals, institutional investors, and other market participants. So this offering to the securities, it can be purchased by the individuals and institutional investors and market participants also who are looking to in diversify their in portfolio and achieve their the investment objectives. So it can be in diversify the in portfolio. So portfolio means it can be in buying and selling of securities in a in and achieve their investment objectives. So last one another point is the regulations of a in primary market. The regulations of a primary market is regulated by the in government bodies. So it can be in regulated to the in government bodies such as Securities and Exchange Board of India. So SEBI. This regulatory body are responsible for the ensuring that securities in issuance are conducted in a in fair. So the regulatory bodies are in SEBI. So it can be responsible for the insecurity assurance, the transparent and efficient manner, so that investors are protected from the in fraud and other issues. So it can be protected to the in SEBI. So any fraud, any mistakes. So these are the primary market functions.